Hey, this is Warren Redlick. I want to welcome Alexandra Merz back to my YouTube channel. We're going to talk about Tesla. The focus of this video is going to be catalysts for Tesla stock in the next 6 months. I am normally talking about Tesla stock 5 years, 10 years down the road. I don't like to think short term, but I have noticed that the stock price seems unusually suppressed, and I wanted to get Alexandra's take on it. So Alexandra is very experienced in the world of finance, particularly credit rating agencies, and has been following Tesla stock closely, along with ETFs like that invest in Tesla stock, Ross Gerber's fund, ARK Invest, and Gary Black's fund. We're going to dive into all of that, but for starters, Alexandra, just sort of on a big picture sense, do you think that Tesla stock seems unusually low given all the facts we know? What are your thoughts on that?
Hi, Warren. Thank you for having me for the third time. I mean, I started all these YouTubes with you, right? The first two were with you, and here we're back. There we are. Yes, I was a fund manager. I was working as a senior credit officer for Moody's. So I do have that insight, but it's been a while. I left the financial markets in 2007 and really came back for Tesla. There's no doubt about it. This has been my passion for the last 2 years. So yes, I do believe the stock is currently really undervalued. I see it immediately higher, but obviously there are reasons it's not. There are macro headwinds, and it's always difficult for us to anticipate. Nobody has a crystal ball and knows what's going to happen. Is the Fed continuing on their hawkish way at the moment? I mean, their path I don't understand, but we'll see what happens. But Tesla itself has so many fundamentals that I do believe on a 6 to 12 month horizon, there is only good news coming up. So for people who can currently buy, I do believe they can't do wrong by doing so. But there will be specific catalysts that I think will address these in the next couple of minutes that I think will help, including a possible credit rating upgrade.
Before we started, you showed me a tweet. Why don't we put that up on the screen and we can talk about that so we don't forget about it.
So this is somebody that follows me on Twitter, and I follow him, and I really highly recommend following him. So this is Thomas Hakkonen. I do believe maybe in European time zone from the timings I see on his tweets, and he tweeted my time in the middle of the night last night, reminding everybody at an $8.30 earnings per share for next year. So that's $25 pre-split. And you all know that Gary, while he seems bullish, is still much less bullish than most of us. Gary is at $8 earnings per share for next year. So let's just take it at $8.30. That would mean that at a bear market multiple of 50, I mean, which is ridiculous for a growth company, the stock would be at $416. At a base market of a multiple of 80, it would be at 666, and at a bull case of 100, it would be at 833. Today we're at 277. So that means actually triple of what it is today. So I just think from time to time, it's good to get back to fundamentals, understand what this stock and what this company represent, what is coming in the coming weeks and months, and that we should be very comfortable purchasing at this level.
Yeah, and just to be clear, my forecast pre-split was $32 a share for 2023, and that would be over $10 a share. And then at a 50, that would be over $500 share price.
And that's bearish. That's really in a market that continues to be as sluggish as it is now.
Right.
So we're half of that.
Yeah, you mentioned macro, and I think the iPhone came out in 2008 in the middle of a financial crisis.
Yeah.
And the iPhone, the Tesla cars are like the iPhone of the automotive space in the sense that, people say, oh, well, you can't possibly sell that many of one model. Well, that's what they said. There was all this talk when the iPhone came out that it was just going to compete in the same space as Nokia and Motorola and all that stuff. And the iPhone ended up wiping everything out because it was so revolutionary. Tesla cars are that revolutionary. So the idea that there's some sort of recession and that's going to inhibit Tesla's growth is not demand limited. Tesla's growth is supply chain limited, it's production limited. And so I see Tesla continuing to grow at a rapid pace for the next 5-10 years.
Yeah.
What do you think about that?
Yeah, completely agree with you. I actually did a study 2 days ago because I was thinking, somebody challenged me and said to me, will this credit rating upgrade really bring some good news to Tesla? Where is the proof in the pudding that a credit rating ever helped a company. And so I was thinking about that. I'm quite slow. I'm rather think it through a couple of days and nights. So the two things I wanted to look at is for big mega caps like that, Amazon and Apple, what happened when they got upgraded, right? Now, Amazon is a completely other market because...
Just to be clear, upgraded from non-investment grade to investment grade, not upgrade.
Correct.
In other words, currently Tesla is graded not investment grade, which is bizarre considering their cash pile, their profits, and their lack of debt. And the same thing happened with Amazon and Apple, that they were graded non-investment grade, and at a certain point they made it to investment grade, and that had an impact on their stock.
Exactly. So I looked in the rear view mirror and thought, let's check when it happened. Let's check what happened on the stock. Let's check what happened on institutional owners of the stock. Because obviously, why do I always get back to institutional holders? Those are people that will hold the stock for a long time. We're not talking about market makers. We're not talking about hedge funds. We're not talking about people that currently already can and hold Tesla, but throw it around. And that's what's currently happening again, and suppress the price, but people that will buy and hold. And so my approach was compare Amazon and compare Apple. I mean, it takes a bit of time to collect the data, so I didn't want to do more than that. But I wanted to make sure that my sample had an impact, in the sense that Amazon, obviously, in my view, has nothing to do with Tesla. It's a nice company. It's a great company. I'm not saying anything bad about about Amazon. I mean, I am actually critical of it, but that's not the subject today. But I wanted to make sure that I wanted to see a different pattern for Amazon than for Apple. And I hope that the Apple pattern would then give me some clue to what is going to come for Tesla. And that proved actually right. So if we can address this now or later, but I would like to share 3 graphs I did on the subject.
Yeah, this was something you shared on Twitter.
I did. I shared 2 days ago. And let me start with this one. And you'll see there are 3, and they're quite explicit. So the first one is this one. So this is the linear share price. This is the dollar share price of the Apple stock, obviously split adjusted, because they split a couple of times. While it was rated speculative grade, so this was until April 2013, well, the stock did what it did, and then it went up. So that's the moment in April 2013 when it got upgraded to investment grade. Now, I actually like linear pricing, because that is what you really have in your pocket if you invested early. But it does give, obviously, a screwed view of high performance for people that were then only there in the later days. So I also did, let me close this one and open the log graph, which is a little bit less impressive, but still shows exactly the same message, meaning once it went out from speculative grade, it increased nicely. But more importantly, even comes then in the third chart. So here, log means that you're actually reasoning in percentage increments, right? Rather than just having the price linearly on the table. But even there, while you saw improvements, it continued improving and in a much steadier pace. Once you have investment grade, actually the lowering, the way a stock falls becomes much less aggressive. Exactly. The dips become lower. Well, not lower in price.
Less pronounced.
Smaller in altitude. That's what I'm trying to say.
Right.
And you see then a more steady increase. But the most important of all is actually this graph, the third one. It's how many more institutions then started holding Apple. And we have to, and it's funny because I found an old article from 2014 where they actually quantified this number. This went down to under 2%. At the end of 2014, less than 2% of institutions had held Apple stock. I mean, can you imagine how dumb people can be? But there you are. And so this is the same graph. You have, during the speculative grade, nearly nobody. There was a bump up at one moment, beginning of 2007, but that quickly lowered down. And then nothing happened. And that will be typical for Tesla as well, because the people that are currently not in Tesla and will become Tesla investors because of this investment grade are not the quickest mover. They have to go through analysis phases, then they have to go in committees, and then they finally will get authorization to invest into Tesla. And the same happened with Apple. And so Apple went from below 5% to higher than 30%. So they had an increase of 25% in their stock ownership to become institutionals. And then that went steadily up over the next 6 years. It has decreased since, but this is a market decrease. What happened here is, people just thought the stock market is not going to hold and they will go back to bonds. And so that's what happens there. They sell and they buy cash or bonds at that moment. But what we see here from 2014 to beginning of 2021 is clearly an increase because of conviction that Apple is the right stock to invest. And that conviction only came once the investment grade was obtained.
Well, there's a step change in 2014.
Yeah.
I mean, there's kind of another step change in 2020, but 2014, that seems to be the driver that exactly. They get investment grade, and then the institutional investors don't react the next day. They have committee meetings or whatever, and at some point they say, okay, it's time, and maybe they all schedule their meetings at the same time.
That's exactly it. I mean, and it also happens that these numbers are published only every quarter. So that's why you see these big blocks, because that can happen at any moment within 3 months, and then you see the quarter end numbers and then they jump. So this happened between the first and the second quarter of 2014. So it's not that much later than the rating increase. It just looks much later because of the delayed report. I do believe this is a bigger subject than people anticipate, but it's a slow subject. It's something that will just change the institutional stack in the stock allocation. It will bring us stability and it will bring us higher prices, but it will take time.
And do we know what percentage of institutional investors hold Tesla now?
We do. It's 44%.
Okay, so we could see a jump to 60 or 80%.
Yeah. 10 to 20% is really possible. You have to know GM has 83%. Right? So this is crazy. I know. I always make everybody laugh with that one. So I don't expect 83% institutionals being in Tesla just because whatever. But I mean, can you imagine GM stock 83%? But then also think further. GM is on the lower limit of investment grade. If GM ever gets downgraded, can you imagine what happened with that stock?
Yes. Yes, I can.
So there you go.
So, all right. So let's talk. By the way, I want to mention to the viewers, I am going to ask Alexandra about Lucid Motors at the end of the interview. I don't know if we've talked about this before, but and maybe we won't talk about it, but I'm hoping to discuss their latest SEC filing. I don't know if you saw that, but anyway, let's move on to other catalysts for Tesla stock over the next 6 months. Obviously, the big catalyst that you and I have talked about, that you have focused on, is the credit rating agencies at some point pretty much have to upgrade Tesla to investment grade because they're highly profitable, they have almost zero debt, and they have a big pile of cash. Mm-hmm. So there's lots of companies that have investment grade rating that have lots of debt, don't have as much cash, and aren't nearly as profitable.
Correct. Right? And once they will have to look at that, look at the numbers. I mean, the tables I publish every day. It will become obvious that they want to hold more Tesla than Ford or more Tesla than GM. And people say to me, so fair enough. So they decide to purchase Tesla, but against what? Well, they will either just proportionately sell a little bit of every other stock they have in the portfolio, or they will have made up their mind that this is a winner against the loser, and the loser will be sold to be replaced by Tesla. That's just how it happens.
Right. And the mechanics of why this affects Tesla share prices, we live in a world of supply and demand. And there's a body of demand that currently does not demand Tesla stock, and it's a large chunk of money. And so if all of a sudden a number of institutional investors decide to buy Tesla stock, that increases demand for Tesla stock. I'm not selling. Alexandra's not selling. So supply does not increase. When demand increases and supply doesn't, you see price go up. Exactly. My take is, on a day-to-day basis, day traders drive Tesla stock price. But when you have a surge in demand from long-term investors, that overwhelms the day traders, pushes the stock up to a new level, and then the day traders are playing around at the new level. Does that sound rough? I don't really understand day trading, but that's...
But that's correct. And there's also just a giving up of the Tesla queues. When the price goes up, there will be short sales that just say, this is it now, I throw my blanket and that's it. So you have a couple of movements of people that were either in the stock, but not by conviction, just because they were holding for it, or because they were hoping it would go lower. But I mean, the shares are there, but there is a limited number of shares. And then we also believe that there may be, at sooner or later, stock buybacks, right? And we can discuss whether this makes sense or not, but now just imagine that this would happen at the same time right? Institutionals wanting to buy and Tesla purchasing back their stock. That would be a major catalyst.
Let's move on to some other catalysts. So stock buyback, I don't have that one on my radar yet. I think stock buyback is down the road. I think Tesla wants its cash pile for other things, but Elon has
let me just pull one back, just because I'm sorry to be so obnoxious of sharing my stuff all the time, but I think it is important. I did one, I'm sorry, I didn't show this earlier, so I don't want to mess with everybody else, but it is the same one that you've seen for Apple. I didn't put the ratings there, but I mean, you all remember it was 2013. But what's important about this one, I'll try to make it a little bit bigger, is the blue line. So when Apple got upgraded, they started buying back stock. What they actually did is they issued bonds, which brought them money with which they bought back their stock, which was very clever. I still would like to know who at Apple was so clever to think of that, because that was a very clever move. So you see the blue line of shares outstanding from Apple going down and the price going proportionally up, right? Just because of supply and demand. At the moment for Tesla, so remember I told you earlier, we're at a 44% institutional ownership rate. So this is the Tesla line. At the moment, Tesla has only issued more stock, blue line, right? If Tesla starts drying out the market by buying back stock, and at the same time, we see these institutional people coming in there to buy and hold, that will have a major catalyst.
And just to be clear, the increase in share ownership is primarily Elon getting stock options.
Exactly.
And then
it is. But I mean, they did issue, remember, after the last split, they issued
they did a cap raise.
The shares. Exactly, they did a cap raise there. But it is also Elon that had his big packet here.
And there's a jump in share.
Then sold some of it, right? I mean, some of that came back into the market since.
And there's a jump in institutional share ownership in 2020-ish, and that is when they got S&P 500 inclusion.
Yes, so that is part of that, but it's actually funny. The jump happened earlier, right? So there were institutions pre-buying early 2020, because remember when the S&P 500 inclusion finally was announced in November for December 2020. So that was rather here. There was movement in the price, no doubt about it. But if you compare to it, it wasn't really a movement in percentage of institutional ownership, right? So institutions had purchased early in the year, waiting for that inclusion to then sell it to the funds. That's why we see this. Why do we see it also? It's because obviously beginning of 2020, once COVID was digested, if you want to call it like that, and prices of stock was low enough for people to be interested, there was a lot of people purchasing Tesla stock. I mean, at the then 330 level, I think it was, pre-splits, that's where a lot of people got into the market.
The next, I have a list of catalysts that you put in a message to me. So one of them is understanding of the Inflation Reduction Act. And, we've had a couple of videos recently with Bradford Ferguson advanced this thesis, and I think others have basically come on board. Rob Mauer's been talking about it. Bradford talked about it with Jordan Gieske, the Limiting Factor. He talked about it with me the other day with my audio editing mistake. But it looks like Tesla's going to get a credit of $35 a kilowatt hour on batteries they produce in Giga Texas and Fremont. Tesla's suppliers, Panasonic and Nevada, is going to get a credit. There are new factories for Panasonic in Kansas and maybe Oklahoma. We don't know where the next one is yet for sure. We'll also be getting this $35 credit. And this will probably have a significant positive impact on Tesla's bottom line. I don't know about 2023. It should be a couple $1 billion in extra profit. 2024, it might be even $10 billion in extra profit for Tesla, depending on how things break out. This news hit, like, Bradford's been talking about it, if others have been talking about it. It seems like Wall Street's ignoring this fact.
I loved yesterday, Bradford did also a Twitter space, and where he explained something I found very interesting. He had talked to a couple of analysts from financial institutions, and what they do, they can't quantify it.
We can't quantify something that's easily quantifiable. Okay.
But because there are a couple of perks to it, right? You can't get more tax credit than taxes you want to pay and whatever. So what they're doing, which I think is actually not that stupid, is when they're doing their estimations for Tesla for the next couple of years, they see an EBITDA before taxes, and then they would usually apply, let's say, a 25% tax rate. They reduce that 25% tax rate by a quarter to account for this potential tax credit, because you cannot get, I think there's federal law is that you can't get more than 25% of tax credits compared to the taxes you pay. So rather than just going into, is it $35 per kilowatt, whatever, they take it all at the bottom and just knock off and say, okay, they can, so now suddenly they can deduct as much tax credit as is possible. So even though the sum may be higher, but they can't take more than the quarter, so we're going to limit the taxes to 3/4 of the amount it was before, which I don't think is stupid. Obviously, you can then carry that over, so they're going to do that for a couple of years forward. The easiest way to look at it, but I don't think it's completely wrong.
Well, that's the analyst. I'm not necessarily talking about analysts. I'm talking about the big money on Wall Street that is either buying or not buying Tesla stock.
They're not there yet.
You know, and the thing is, I talked about this with Bradford, the 25%, as I understand it, you can't get tax credits for more than 25% of your profit. Yeah. But if Tesla's going to have $32 billion in profit next year, sorry, I think that's the right number, $30 billion in profit next year, and the tax credit's only $3 billion, it's not pushing the 25%.
That's true. That's true.
So, and then you go out the next year and they go to $60 billion in profit, and you get to, $10 billion in credit, you still don't have a problem.
Yeah. I had a good chuckle last night in bed because value analyst, Yaman, you know him, yes. We met him in Texas. He put out a tweet last night saying, 2023, it's going to be 50 billion. Yeah. 2024 is going to be 100 billion, and 2025 is going to be 200 billion. I mean, I love betting coffee with him. I take under on all three.
So if FSD crosses a certain threshold and the take rate goes up, and so currently, let's say 10% of people are paying for FSD, and all of a sudden 50% of buyers pay for FSD because all of a sudden it's like, wait, I don't have to pay attention anymore most of the time, and I can read while I'm driving, and it's demonstrated it's radically safer without question, then you might get a much higher take rate. And at $15,000 per car, that increases your average selling price quite a bit. So there are things that could happen, not in the next 6 months that you and I are talking about. I don't think that will happen in the next 6 months, but in 2023, it could happen that we cross that threshold where the take rate jumps.
Yeah.
So
yeah, and there are also, I mean, let's never forget, we have also strong headwinds, because while this Inflation Reduction Act actually proves to be better than we initially thought. I mean, remember when it came out, it was like, oh my God, this is pro GM and pro Ford. And I do believe it is actually for them as well. But Tesla is getting a good chunk of it. I always realize that whatever happens here in America may still be new and innocent by looking at this. There is so much headwind coming back. You remember California put out this new legislation goal that by 2035, there are no more petrol-powered cars out there. I mean, did you see the news lately? Fox News, I mean, Tucker Carlson did yesterday evening a 5-minute spin on this, how bad and how, I'm like, I can't believe that politics, national politics still gets into that and still doesn't accept that EVs is the future and just prints it like the devil on the wall. It's incredible. There
was a clip of Elon saying that by 2030, half of all new cars will be electric. And the idea that you're going to ban gas cars in 2035 is like banning horses from interstate highways. Like, I think by 2030, I think Elon's wrong. I mean, I normally believe, I'm normally like the biggest believer in Elon. I don't think there will be any gas cars sold in 2030.
I know, but you do understand as well how much headwind we have and how much people don't believe it yet.
Well, so look, if you go back to 2000-ish, 2002 or something like that, I had a handspring Treo phone, one of the first smartphones, and all my friends were mocking me. Oh, there's Warren on his phone, whatever. Warren, why don't you go play with your phone? And I'm sure they're all walking around with iPhones now, right? All these guys who were mocking me, and probably, within 10 years, they were all on iPhones all the time, right? So people looking at Tesla now and criticizing electric vehicles, like they just don't get that even non-Tesla EVs are improving faster than gas cars. And I would argue that the Mustang Mach-E, the Porsche Taycan, the Hyundai Ioniq 5. I think there are a lot of EVs that are already better than their gasoline counterparts.
Sure.
And the
But also,
VW ID4,
yeah,
right?
but
So,
also, as you know, actually sabotaging their own business rather than really putting a dent into Tesla's future.
right, well, that's a problem for them. But I think what we're going to see is any company that is not making electric vehicles, that is making gas cars primarily, is going to be out of business by 2030.
Yeah, let's talk Toyota. I mean, Toyota is a real bad case. I have no idea what they're thinking there.
I think they're just that. I don't know either. So anyway, I just really quick, I just wanted to mention, we talked about the Inflation Reduction Act.
Mm-hmm.
I don't see any evidence that it's actually going to reduce inflation. I think it's actually inflationary rather than deflationary.
But isn't that crazy to label something so boldly something that's not true? I mean, I just
I don't think the Patriot Act was patriotic either.
No, me neither. But I mean, this bold labeling, wrong labeling, and we're taking it and we're actually repeating it, right? Because we've said at least 10 times now Inflation Reduction Rate. So we're playing the game even though we don't want to.
No, and look, if different people have different opinions on what's causing inflation. So if you think the problem is that interest rates were too low and the Fed raising rates is going to solve the problem, well, that's not the Inflation Reduction Act anyway. I think, and you can have, people can have their own opinions. I think the primary driver of inflation is government spending a lot of money and government printing a lot of money. And that's bipartisan. I'm not picking on one party or the other. That's a bipartisan thing that the government has been printing money, or the Fed has been printing money, and the government has been spending excessively. And you look back in history, and it's usually not good for the economy when government overspends and prints money.
True. So, and when the inflation gets to levels it is now, I mean, I'm watching closely Europe, Italy, Germany. This is crazy what's happening there. It really is. I don't think we realize in America yet to what point their heating cost, their fuel, whatever is getting up, is exploding. It's crazy. And we're in the middle of the summer still. They're all still, feeling well. Just go 3 months forward.
Yeah, I just saw some I forget what country it was. Some European coffee shop posted their utility bill for the month, and it was 10,000 euros, which is roughly $10,000. And they were like, how is this possible? It just is what it is. All right, so let's move on. On my list next, the list that you sent me next, I have AI Day as a catalyst, September 30th. I'm a little skeptical about AI Day as a catalyst, but what are your thoughts on that?
Well, my list was the calendar. I put them in the order of dates that I thought was coming. And I actually just want to warn everybody, I think September is going to be a boring month if we don't get that credit rating. And that's why I'm such a Karen about it. I really want to push them into it. But I do believe September is not very, not a lot of good data, not a lot of good moments. I don't think they will announce the new Giga yet and whatever. So I don't think there's much positive news coming out for September, except for end of the month of September AI Day. Do I have the slightest feeling that this will have an impact on the stock price? Not at all. This will just, Wall Street will ignore it. I mean, maybe if there's suddenly this absolutely unusual robot coming up doing something absolutely unusual that we don't expect, but I don't think that's what's going to happen. But so if it is an AI Day, that's mostly a recruiting event, bringing everybody up to standards where we are, where we want to go, and quite technical. This has no impact whatsoever on the stock. But the good thing is that's going to be a Friday afternoon, if I remember right, in September. And then by the weekend, Sunday or Monday morning, we'll have Q3 production and delivery numbers. So that will be very quickly afterwards, I think, a driver, because I expect those numbers to be higher than Troy thinks.
Yeah.
I'm
at 380. I'm at 380 on deliveries. Where are you?
Yeah, well, I think actually could even be a little bit higher than 380. With my husband, we're disputing because he thinks they can go to 400. I believe that's a bit high, but between 380 and 390 is probably possible. We watch it closely. I mean, we all see our videos on the parkings. We all count our trucks that we meet on the motorways. I have the Santa Barbara shop every day. Somebody passes by and checks me out, whatever happens. But I do believe this is going to be a very good quarter. And especially, how short-sighted they are at Wall Street. So Q2 was lower because there was the shutdown in Fremont in China because of the COVID situation. So this will be much better than Q2, but they won't think anymore what happened in Q2, right? So the surprise of how much higher it will be is going to be a catalyst. I do believe beginning of October, we're going to see some good news, and that will then obviously translate also in better financials in the third week of October.
Right. So my take on AI Day really quick is that we've seen this with the previous AI Day, with Autonomy Day, with Battery Day. Whenever Tesla does a presentation like this, Wall Street just doesn't get it. So that they will reveal some technology that will be amazing to nerds, right? To engineering geeks and people who have really dove into what Tesla is doing to change the world. But, you know, if it doesn't do parkour like Boston Dynamics robots, they'll say, oh, Tesla's got a robot that isn't as cool as a Boston Dynamic robot. And they won't realize, no, they had a bot and they set up an obstacle course that it had never seen before. And they said, walk to the other end of the room. And they pick a spot, walk to the red dot. And the bot will walk. I'm just speculating what's going to happen. The bot walks to the red dot, dodging, walking around obstacles with no human coding.
Yeah.
And I get it. This is a ballpark prediction of what we're going to see. I'm going to get it. AI engineers are going to get it. You're going to get it. And no offense to your friend, but Gary Black's not going to get it. And the Wall Street community is not going to get why this is different from a Boston Dynamics robot.
I mean, that's the same problem then when they talk about Cruise or Waymo. I mean, I've given up even replying. It's just, if that's what you think is comparable, stay at your level of intelligence. That's all I can say. Yeah.
Okay. So the next one, Q3 production and delivery numbers. Let's just touch on that a little bit. Troy Test-like is at 368,000. Wall Street, I think, is at 364,000.
Yeah, and then just understand, Wall Street is at 364 because those are numbers that have been projected last year. So they didn't, adjust or anything. Now they were disappointed in Q2, not switching on the brain. So 364 was their linear expansion of what they expected. So I don't think they really still expect 364. I think they actually are lower than that.
Okay. So I see Troy's number for Shanghai is like 212,000 for the quarter, and I have 220,000. Troy's pretty good, but I think that the thing that really stood out, and I don't remember if we talked about this before we went live or after. Troy's numbers for Q3 and Q4 in Fremont don't go up. He's got pretty much 130,000 a quarter for all 4 quarters, and he hasn't explained why Fremont deliveries aren't growing in Q3 and Q4. We were talking earlier, and you were your husband thought there was a pace of 700,000 at Fremont already, and I don't know that they're at that pace, but I expect them to continue growing. And you had a theory about the tax credit affecting deliveries from Fremont.
Yeah, I think the Tesla, and I also probably think Troy are expecting cancellations or postponements of people taking delivery in the last couple of months, thinking by postponing it into January, they get the 7,500 tax credit. So, and we've had the situation before, and then Tesla had a stance where they told people, if you don't take delivery, you're going back to the queue. So it's not just that you're the first one in January, you'll just have to wait your round again, and it could be 6 months later or whatever. I don't know how they're going to handle it, but it could be, 7,500 for somebody that buys a car at 60,000 can make a difference.
Oh,
right?
It's a big number.
Exactly. So I do believe if it means, if they have a solution that they can wait, I think there'll be people that may postpone. Yes.
Right. So my take on the number one, Troy doesn't really have much growth in Q3 either for Fremont. So I could understand saying a dip for like the last few weeks of Q4, or even the last, let's say of December of Q4. Yeah. But at a certain point, and the thing is, there's so much demand. So for example, they stopped taking orders on long range Model 3, which I don't think qualifies for the credit anyway. I think its price is over 55,000, so it doesn't qualify for the credit. So it's only a limited number of models that Tesla sells that would be affected by this, like the standard range Model 3, and maybe, I don't even know if this, I guess the long range Model Y might qualify for the credit.
Don't you think, this is a weird theory, and I may be completely wrong because I have no clue how a car is constructed, right? I can bring my little angle of the world to it, but I may be completely wrong. But don't you think they'll be able to do pricing completely different, that even a performance car, you can actually buy at 55,000, you drive out of the dealership, and which is not a dealership, of course, and get home and press the option button, pay the 10,000 more, and then gets the upload of whatever else can now be upgraded. So that you see what I'm trying to do.
Yes, I think we will see Tesla reconfigure their pricing, and also if there's a $7,500 tax credit, what any company is going to do is they're going to increase their prices to capture some of the credit. So if Tesla was selling a car at $50,000, let's say $52,000, and now there's a tax credit at $55,000, Tesla raises the price to $54,999.
Exactly.
And then you get the 7,500 credit.
Exactly. So that's the 2,500 that Tesla, or 2,499 that Tesla gets in its pocket. But then all the options obviously cost as much as before.
Right.
Are a software download, or I mean, I don't
certainly
know
FSD. I think the best example of that is FSD, that people will not buy FSD when they take delivery of the car, and they will do a software update when they get home, and that probably won't be considered an issue.
Yeah.
And you can see that with a performance update, right? There was a moment where you could pay, I think this is still true in some vehicles, you can pay $2,000 for a acceleration boost. Exactly. So you buy the performance version of the Model 3, but it's detuned, right? And when you get home, you spend, and then you kind of figure, if Congress catches wind of that, if the IRS catches wind of that, I could see a regulatory interpretation. No, we're not going to allow that. I do think the IRS might not like that. And then, there's a question.
It's the car. The others have to improve their software, right? I mean,
right. I'm just saying that, that might go against the intent of Congress, and I could see the IRS saying, no, we're not going to let that. We're not going to let you get away with that. So I think that's a little tricky. I think the biggest thing is you'll see a standard range Model 3, which is, let's say, $47,000 now, will all of a sudden be $52,000. And you'll get you'll pay $2,500 less for the car because of the tax credit, right? So I think you're going to see some of that gaming. And that's another reason why Tesla's probably not going to cut people brakes. There's so much demand for a long-range Model 3 that they're not going to say, and again, I don't think long-range Model 3 qualifies for the credit. I think it's priced over $55,000 anyway.
Yeah.
I guess it's probably the long-range and maybe the performance Model Y that are most affected. But again, there's so much demand for those cars that if half the buyers don't take delivery in December, they still sell all the cars.
Yeah. And the problem, you're right, is probably much more a November, December problem. I just can't see somebody who now in September could pick up the car who says, oh no, I'm going to wait 4 more months for $7,500. First of all, as you say, the price may go up by then anyway. And if Tesla at least hints and says, you know what, but then we can't guarantee the price. Yeah. Then people will take delivery.
Or they might say, listen, we'll let you take delivery in January, but we're going to raise the price $2,500.
Yeah.
So you're saving $5,000. I could see a little bit of that. So, but that doesn't affect Q3. I mean, maybe there's some people in Q3 who are saying, you know what, I'm not going to buy my Tesla.
Like I said, I'm still very, very positive on Q3. I'm more positive than you. I'm between 380 and 390 rather than 380.
Okay. So the point being,
beginning of October is going to be a good moment, a good week.
So the point being, something like October 2nd, we're going to get Tesla's production and delivery numbers, and it's going to be in the ballpark of 380, which is much more than Q2, and it's much more than Q1. Q1, I think, was higher than Q2 because of the Shanghai lockdown. And you do some mental math in your head, and you can do some math on paper and say, well, what is this going to mean for earnings per share for the quarter? What is this going to mean for revenue for the quarter? And we know that pricing has gone up. So the average selling price, so you're going to see higher volume, higher average selling price. Administrative costs have probably not gone up. So there's a growth in deliveries. Whatever growth you see in deliveries, there's an even higher growth in revenue, and there's an even higher growth in that in profit. And then you push it out to, we're going to skip over Twitter resolution for a second. Then you push it out to October 21st, 26th, something like that, when Tesla has their earnings call, their earnings report and earnings call. And we expect to see a big number for revenue and earnings per share. And all these numbers are going to look a lot better. And not only that, but margins will get better because Giga Berlin and Giga Texas will be less of a drag on margins.
Yeah, and I do believe from now on, we just see improvements other than big headwinds, right? I mean, obviously, the COVID situation or whatever, that's another, or war or whatever, that's another big risk. But apart those, I really see only steady growth now. Steady growth in already Q3, even more so Q4. I expect Q4 be somewhere between $5 and $5.50 for that quarter, and that's just unheard of. I mean, this is absolutely crazy. $5 in
Sorry, that's pre-split.
No, this is now.
You expect $5 earnings per share?
No. Sorry, this is pre-split. Yes, excuse me. 180.
Okay.
180.
$1.80 per share for Q4 earnings.
Yes.
Yeah, I think we're going to see that in Q3.
Oh, really? Oh, you are really high.
Yeah, not the wrong kind of high, but. So okay, so let's take a step back. I think we've covered that. So there's a really strong chance in early October. It won't be the AI day, but the production delivery numbers. Investors start to wake up and say, "Wait a minute, this is going to have a big effect on earnings per share." Okay, the stock is worth more than this, and we see a bump in the stock, and then we get the Q3 financials. And if the market hasn't caught up on the production and delivery numbers when we get the Q3 financials, that should bump up the stock. There's also, you have down on your list, Twitter resolution, which I don't know if you have it down, I guess, before.
Yeah, it's sort of last week of October as well. It's about the same time. I think Twitter resolution can go two ways. I mean, I still hope he buys Twitter just because I want him to have Twitter, and I think it's going to be a perfect tool in his whole agglomeration of companies to do what he wants to do. So if it's resolution that he's buying it, obviously the question is at what price. I still hope he buys it at $39, which is obviously a pipe dream, but I still hope that. $39 would mean that the first time he sold in, what was it, March, when he announced that he was interested in, or May, was it? In May, when he announced that he was interested in Twitter, that amount accounted for exactly $39. Okay, so that was that. That's why, I didn't just pull this number out of the air. He since purchased more because some of his financing partners may drop out or the price will be higher. So if he buys, I think there's enough money now on the table that he doesn't need to sell further Tesla shares, and then the whole subject is over. I mean, it won't be over in the good because so many people will hate him having bought Twitter, but at least the overhang on the Tesla share will be over because now there is no speculation anymore. Does he need to sell more? The second subject is if it doesn't happen, right? If it doesn't happen, no matter whether he has to pay $1 billion to get out of the deal or whatever, but if it doesn't happen, then he promised to reinvest all that money back into Tesla. So then we have a big whale purchasing again Tesla shares. So I do believe that whatever happens in that Twitter situation, it can only be better for the Tesla stock.
Okay, I just want to be my own perspective is what really should be driving Tesla stock is not whales purchasing or institutional investors purchasing, but what are the production and delivery numbers? What are the revenues? What are the profits? And what's a good multiple for price? Because when you're looking 5-10 years down the road, this little stuff doesn't really matter. But it does matter in the short term for short-term investors because you have these short-term fluctuations in supply and demand for the stock.
And don't forget, you gave me as homework what's happening the next 6 months. So I put it down. Does it really matter to me? No, it doesn't.
Okay. So you have credit rating upgrade next. I think we covered that at the beginning. And then you've got FSD 10.69x wide release. So we are expecting in less than a week or about a week. I forget when Elon just tweeted this that I just found out I have a Model X and a Model 3. My kid drives the Model 3 and I'm going to be driving it tomorrow night. My Model 3 got the 10.69.1 update, so I'll be driving it in 24 hours or 36 hours or something like that. And my Model X does not have FSD beta yet. And the
because
next
you're
release,
working on your safety score. Is that why you don't have it yet?
No, they're not downloading it to anyone. I have a 94 safety score, which is fine. They're not giving FSD beta to anyone. I don't know if it's early June or late May or something like that. I have a friend, Lincoln. I don't know if you know Lincoln. Lincoln and I both bought our vehicles in early June, and we have high safety scores, and we're not getting it. And I think they are going to run the third round of FSD beta update, which will go out to everyone who currently has FSD beta at all. And then once that goes, then probably a week or two after that, they'll start rolling it out to more people with high safety scores. Or they may say it's good enough and they may do the genuine wide release, because the current wide release, which is coming in a week or so, is to the 100,000 people who already have beta. But I think what you're talking about in this list is at some point there's a version of FSD beta that goes wide release to everyone who paid for FSD.
Exactly, or even paid for it either upfront or now wants to purchase I don't even know, is it $200 now or $300 a month?
The subscription?
Yeah.
I thought it was, I don't remember there's $199 or $299.
Yeah, well, there we go.
But I think very few people are subscribing without beta, I think. I think the monthly subscription numbers are probably low.
Yeah.
Because it's not that exciting. Yeah. I mean, I drive regular FSD without beta. Today I drive it on an almost daily basis, and it's okay. You know, on highways it's the same thing as autopilot basically, with some lane changing functionality. But in city streets, it's like, okay, it works, but then it slows down for green lights and it won't make turns, and it gets frustrated. Like I get frustrated. Just today I got frustrated. Like it started slowing down for a green light when I was not paying full attention, and like, what? Oh, and it's a green light, just go.
So does the beta you have on the 3 already not do that? The
beta I have on the 3 does everything. It will drive on roads that don't
slow down. It doesn't slow down at green lights and stuff like that.
Beta does not slow down for green lights. Beta makes turns at intersections. Beta is better on off ramps and on ramps than FSD, than regular FSD. And then a good example is on residential streets that have no center line. On streets that have no center line, FSD won't operate. It's called auto steer. My FSD and my Model X will not operate on a road that doesn't have a center line. The Model 3 with FSD beta will operate on a road. I think it'll operate on a dirt road. Yeah. I don't know if I tried it on a dirt road, but I think it will operate on a dirt road. I think I've seen.
You see, for people like me who are really still very uncomfortable with it, once the beta is in wide release, that I could just subscribe to the monthly again and try it, I'd be really happy to try it again. Just because as it is now, as a control freak and woman, I don't know what it is, but it freaks me out. But I really want it not to freak me out anymore. I'm very positive to the technology. I just want to make sure that everybody considers it's good enough that I don't have to be. I mean, I will of course pay attention, no doubt about it, but that it's gotten to a certain threshold where I can feel comfortable about it.
I think the mindset that helps me with FSD beta, which is not perfect, but it's very good, is it's fun to watch it drive and pay attention. And I taught one teenager primarily, but really 2 teenagers to drive. And I think you probably have had some involvement with teenagers learning to drive. It's so much better than teaching teenage children to drive, because you're sitting in the driver's seat and you can.
But that is so stressful, right? I mean, I hope it's better than that, because
no, it's much less stressful. It's much less stressful because
I hope so.
No, it is because in fact, 6 months ago, roughly, my oldest, we went on a drive and there was a point where I got tired and I asked her to take over, and she's driving and I said, use FSD beta. And I watched her run FSD beta for about an hour. And it was much less stressful than watching her drive without FSD beta. So she doesn't drive a lot. My younger one drives a lot more, so it's less stressful watching her drive. But yeah, so no, I think if you come at it from the mindset, it's cool watching this technology develop, rather than if you're in a hurry to get somewhere, if I'm in a hurry to get somewhere, I turn FSD off and I drive fast. FSD beta, FSD does not drive as fast as I want to drive, is not as aggressive as I want to drive. So I don't use it when I'm in a hurry. But if you're like, hey, I think I'm going to go for a drive, let's watch it drive. Or I'm going somewhere and I've got plenty of time and I'm not in a hurry, then I'm going to watch it drive and I'll pay attention. You have your hands on or near the steering wheel, your feet ready to hit the pedals, and you just take over when you need to. I don't find it stressful at all. I think it's fun.
Let me ask you a question that maybe you want to edit out, but on the yoke, where do you hold it so he recognizes you're holding it? Is it on the bottom? Is it on the side, or does it matter?
I typically hold it on a corner. I find it easier on the yoke because the yoke is wider than the steering wheel. The steering wheel is 13 inches wide on my Model 3 and the yoke is 15 inches wide, ballpark. And so because the yoke is rectangular, my hand rests particularly on the upper right corner of the yoke. I just have my hand right there. My elbow is on the armrest, and that mostly works.
I mean, I got used to the yoke so quickly. I love it much. I mean, I was so overthinking it, and then once we had it, it just took 10 minutes, and that was it. And now going back to a round steering wheel, it looks antiquated. It looks useless. What's all this thing? Why is it so big, so round, so whatever?
Yeah. Now when I drive my Model 3 and I'm going to turn signal, I'm like, why isn't it on this, oh, it's a lever. Oh yeah. Okay. It's a stock. Okay.
All these sticks, right? And you're like,
Yeah.
oh, okay.
So, all right, let's move on. So semi deliveries, we are expecting by the end of the year, Tesla will deliver a Tesla Semi to a customer, probably Frito-Lay Pepsi.
Yeah.
And the theory, do you think that will move the stock?
I don't think it will have a huge impact on the stock, but I think it's a goodwill. Meaning people were going on for years, well, there's no semi, whatever. We all know why there were no semi so far. I mean, so much battery power in one thing. There's no supercharging, well, mega charging network yet for the trucks. I mean, there's so much that has to still be built. But I do believe the fact that there is now a customer paid for it, there are, I don't know, 5 or 10 or 25 trucks that are going to see the light of the day. I think this is going to be a very nice sign. And I hope both Tesla and the client make a fuss about it.
Yeah, I think a couple things that are going to happen. Number one, I think most people don't appreciate, even Tesla fans don't appreciate what a game changer Semi is for the industry. I have a friend who's a test driver for Tesla, testing Tesla Semi, and he's a CDL. He's driven trucks for a living, and he is like over the top about how insanely good this is. That this is a massive game changer for the industry. That going uphill, it goes uphill fast. Pulling a load, it accelerates a lot quicker. So much more efficient, so much lower cost to operate. Like this is a big deal to people who operate semis, is their cost per mile. How much are they spending on this vehicle? And it's just dramatically lower cost to operate this vehicle just on the gas versus electricity side of it. And then you get into maintenance costs, and there's so many reasons why it's so much better. It's gonna be a huge jump.
Yeah.
So, but will Wall Street appreciate that? I'm not sure. I think you will probably at some point see some kind of like Car and Driver, Road and Track, some car magazine or whatever will do a test, and they'll test Tesla Semi versus other vehicles. And I don't know if that might not happen by the end of the year, but when that happens, people are going, oh my God. And like they literally might test it against like some SUVs or pickup trucks. Like they could test it against the Ford F-150. Excuse me, they could test it against the Ford F-150, and it might be surprising how well it does. So,
yeah, I mean, I think it's just a real perfect goodwill enhancer. When you're thinking as a financial analyst, you have some stuff that you can put straight away to a bottom line. This is not straight away bottom line. This is something where you just think, okay, it's done. They can tick it off the box. They're starting doing this. Real trucks are there with real clients. And it's a nice to have. Is it my biggest catalyst? By far not. It's a tiny little thing, but it's a good one.
Yeah, no, and at the pricing that was indicated before they took ordering offline, it didn't look profitable to me. At $180,000, the battery pack alone is going to cost $100,000.
Yeah.
So they're at best breaking even on the long range, the 500-mile Tesla Semi, but there's also the fact that they may be selling software or services that go along with it that will add value. But ultimately, I think Tesla Semi is going to sell for $250,000 to $500,000. And my friend thinks they could sell it for $750,000. And if you look at over the life of the vehicle, and now then it becomes hugely profitable. But, they probably will, everybody who's ordered at $180,000 is probably going to get it. Oh, there's also a $40,000 tax credit in the Inflation Reduction Act. So they're probably going to increase the price by at least $40,000 to offset that. So that's $220,000. But my guess is it starts selling at some point at $250,000. And then Tesla does actually make a significant profit on the vehicle. I don't think it's Model Y margins though. So I don't think it's as profitable, and it's sucking up a lot of 4680 batteries.
Yeah.
So, okay. Announcement of new Gigafactories. I think we expect one Gigafactory announced by the end of this year. I don't know that moves the stock. What do you think about that?
I do believe it does. It really depends where it is. If it's another one in America, I think it will have an impact directly on the stock, just because that shows the commitment to America. That shows, I mean, the thing is, will it be car production or will it be battery production? Will it be 2 gigas? That's a whole thing. Now, I also believe that there will be one very shortly in Asia. I know you're more for Japan. I was looking at South Korea and Indonesia. So I do believe every new gigafactory just proves confidence of the management, confidence in client demand. So I do believe it is it the strongest catalyst? No, the strongest catalyst will be delivery numbers and earnings. But is it a good catalyst? Yes.
Right. Well, so if you're looking down the road for Tesla's future and you're saying, and Tesla's saying we're going to deliver 20 million vehicles in 2030, right? Well, you have to have more factories to deliver 20 million vehicles.
No doubt about it, and a couple more, not just one or two.
Right. Well, so the theory is, I think the theory is roughly like 1 or 2 a year from now till 2030 would get you there. Really 1 a year, but I think that Tesla is sandbagging, Elon is sandbagging, and I think we're going to see multiple gigafactories fairly soon. The question is just, I think that the holdup is, do we have the battery minerals to support? And that's where we're waiting for Master Plan. I don't think Master Plan 3 was on your list. So Master Plan,
forgot something.
Master Plan 3, but we don't know when that's coming.
Yeah.
So yeah, I do think that South Korea is a possibility for a gigafactory, particularly LG Chem is building a 4680 cell factory in or near Daejeon, South Korea, and that's a good spot to build a gigafactory. Panasonic is building a 4680 cell factory in Wakayama, Japan, near Osaka. That's a good spot for a gigafactory. Panasonic is building a 4680 factory in Kansas, just west of Kansas City. And that's a potentially good spot for a gigafactory. I think in particular in the United States, I think the argument would be demand for Cybertruck is bigger than they expected. Giga Texas will not be able to meet demand for Cybertruck. And building a Cybertruck factory in the middle of Kansas or near Kansas, maybe it's Nashville, Tennessee, whatever, somewhere near Kansas, that could be allowing a greater distribution of Cybertruck to a larger population.
Now, let me ask you 2 questions because you're much more knowledgeable on these subjects than me. Is Giga Nevada at its max? Do they already produce everything they can there? And the second one is, can't Austin extend? I always had the feeling like Berlin that Austin still has extension possibilities, right?
Sure. So Nevada's problem is not that they can't expand, it's that they don't have a labor supply. There aren't enough workers around Giga Nevada. Giga Nevada is in Sparks, Nevada, near Reno, and the population there, it's a combination of, because you can hire people from somewhere else, but then it's when they announced Giga Texas and Giga Berlin, it was, these are places that young engineers and their families want to live. And that's, you want to make it a place that people want to live, and Sparks, Nevada just doesn't have that. Reno doesn't have that. So I think the long-term growth of Giga Nevada is kind of limited by that. I think there was a plan to build Tesla Semi there, and I think they have a building for it, but I think they're ultimately not going to build Semi there because, again, you don't have the workforce for it. So there is room to expand in Austin, and there is, I think, plenty of workforce and plenty of people who want to live in the Austin area. But it's not a great distribution point for Chicago and the Northeastern United States, and the large chunks of the US population might be better served. And if you're going to be making battery cells in Kansas anyway, then it might, and someone that I met at Tesla said, watch where they build cell factories. When we were talking about where gigafactories might go. So, somewhere near Kansas City would make sense. The Kansas side of Kansas City makes sense because it's a more employer, less union-friendly state. I think near Nashville is also a possibility. Again, places people would want to live. Kansas City is a place that is somewhere people want to live. There's a lot to do. There's a lot of fun stuff to do. Nashville, same thing. So maybe Indianapolis. Right. These are all within a reasonable trip of the Panasonic factory in Kansas. Indianapolis would be kind of good because you're getting closer to Chicago in the Northeast and Ohio and all that. So I think there's a really good argument for that. I pick Japan plain and simple because Japan is the world's 3rd largest car market, and it is one of the wealthiest countries in the world. And the problem with South Korea, which I do think is a fairly large car market and a fairly wealthy country, is South Korea has actually got greater population decline than Japan. If you're looking for return on investment in your factory, and if you're thinking 10 years out, the population situation doesn't necessarily matter that much. And the labor force starts to become an issue 10 years from now, maybe. You go 20 years out and this is an issue, but I think Japan will still be the 3rd largest car market for 20 years. And South Korea.
I'm a bit doubtful on Japan. I'm a bit doubtful with Japan is Toyota has such a standing there, including into the governments. I just don't think they'll open the doors to Tesla. I mean, I hope I'm wrong, but I doubt it.
Well, but you could say the same thing about Hyundai, Kia, and the Korean government. And
yeah, but South Korea is more open to the world. I mean, Panasonic. I
don't think so.
You don't think so?
No.
In Japan?
No. What's the leading restaurant chain in Japan? McDonald's. What's the leading beverage company in Japan? Coca-Cola.
Don't you think there are McDonald's in South Korea?
I'm just saying, like, now there was a window after World War II where these companies came in that made it viable. But no, my impression is that, first of all, China was very restrictive and Tesla opened in China. There's no South Korean.
China didn't have a big car maker to protect. Japan has to protect.
So does South Korea. But so here's the thing. Here's the key distinction that makes Japan more likely. A couple key distinctions. Number one, like I said, largest car market, third largest car market after China and North America, or after China and the US. Tesla has a Japanese board member. It doesn't have a South Korean board member.
And a very smart one.
And somebody who's very, very well connected in Japanese politics and the Japanese financial community. I spoke with someone in Japan about this issue, and they said it's less of a national issue and more of a regional government issue. And Panasonic is big in Osaka. So Toyota, I think, is Nagoya. I'm not sure exactly. I think Toyota is near Nagoya, Japan, and which is not that far from Osaka. But I think the thinking is that the Osaka region might have more pull and be able to pull it in and say, hey, we need this. And it's only going to make 2 million cars. That's nothing compared to what Toyota makes. What are you worried about?
Okay. Well, it's going to keep the two of us discussing, because I'll take South Korea and
we'll know. We'll know in less than by the end of the year. We should know.
If you win, I'll admit, and if you win, I'll admit, and if I win, you will have to admit.
I don't think it really matters. At some point, they have to build a gigafactory in Japan and probably in South Korea as well, because they're large car markets.
Yeah. But I want to win.
I don't know who's first.
I'm just joking.
No, I think I'm not saying which one's first. I mean, I do think Osaka makes the most sense, but I think Kansas makes a lot of sense. If you look at demand for Cybertruck and you recognize, like, my take on it is, there's demand for Cybertruck now. Imagine what the demand is going to be when it's on the road.
Oh,
so
crazy.
If you're looking at that saying, wait a minute, every time people see this thing, they go, oh my God, that's amazing. And you recognize, I'm going to be going to some country bar to take line dancing lessons. I'm going to pull up in my Cybertruck, and some girl's going to see me, and she's actually going to go on a date with me because I have a Cybertruck, and every other guy's going to see her get in my Cybertruck, and they're all going to want Cybertrucks. That's my
dream.
That's my theory of Cybertruck demand. Cybertruck demand is about girls.
Now I see why you're delaying all this thing. It all depends on the Cybertruck.
Exactly. Okay, so beyond the next Gigafactory announcement, we have Q4 delivery numbers roughly January 2nd. Yeah. I don't think it's going to reach 500,000. And I think your point about delayed deliveries, at least the last couple of weeks of the year, makes a lot of sense. Like, even Tesla will say, well, yeah, it makes sense to delay delivery a couple of weeks, and they're not going to care about that. And they'll probably even say in the earnings call, hey, or they might even announce that, hey, a lot of people delayed deliveries, so we expect a big surge in Q1.
I'm really looking forward to their strategy on this one, because it will come. 7,500 is significant enough, and I want to see, will they tell everybody, okay, if you delay, you're back in line. That means April, May. You won't just pick it up in January, and then people may, or will they just be saying, okay, fair enough, pick it up first week of January?
I think there'll be a window, like with 2 weeks to go in the year or a month to go in the year, where they'll say, you know what, if you want to delay, that's fine.
We forgot one that I think is very important, and it's probably not important in terms of Wall Street and stock price, but I think it's very important for us stockholders, is when will we have a significant ramp of 4680s? And that's a subject you're much more knowledgeable than me. When do we expect really 4680s? I saw a couple of pictures the other day from Austin, where on the third floor there seem to be now packs and packs and packs of 4680. So if that's true, that'd be good news. But I mean, It is obviously slower than we all had hoped for.
Right. So I have a theory about 4680, which is that the volume, I question whether they may have stopped or greatly reduced production of the 4680 Model Y. That the Tesla is one of the key distinctions between Tesla and other car makers is they're able to be very flexible in how they distribute their batteries. So they can make a Model 3 with lithium iron phosphate, with 2170. They can make a Model Y with lithium iron phosphate, 2170 or 4680. You know, and then they can make Megapack with 1865, 2170 or lithium iron phosphate. So they've shifted Megapack to lithium iron phosphate, and that frees up 2170 and 1865 cells. So my theory is that the current state of 4680 structural pack Model Y is not that much better than a 2170 Model Y. So Tesla said, you know what, we're just going to build 2170 Model Ys, and we'll use those 4680s in Semi, and they're going to focus 4680 on Semi on Cybertruck until 4680 ramps so much that they have enough that they can start making Model Ys with it again in high volume. And by that time, they'll be on the next iteration of 4680, and they'll be on the next iteration of structural pack, and the benefit will be a lot greater. That's a theory. I don't have any support for it. But the one thing I will say is I went to Cyber Rodeo when they, you know, kicked off the factory itself. And there was this area where they showed us the production line, and it was a 4680 production line for Model Y that I don't think was operating. It was sort of showing us this is what it's going to look like. I went back for Cyber Roundup for the annual shareholders meeting, and the same area was being used to make 2170 Model Ys. So if they're making 4680 Model Ys, they're not making them where they said they were going to make them. So where are they making them? And they did make some 4680 Model Ys, but I think the recognition was, you know what? We have enough, because we've shifted Megapack to lithium iron phosphate, and because Panasonic is probably increasing 2170 production and LG Chem is probably increasing 2170 production, we can just make long-range Model Ys with 2170. We don't need to make them with, and also a lot of Model 3s are being made with lithium iron phosphate now. So if all this 2170 cells are freed up, and if the 2170 Model Y is really good anyway, and it's highly profitable anyway, let's just make 2170 Model Ys, free up these 4680 cells for Semi and Cybertruck. And I think that may be happening. And that's like, for the Say Technologies, I think that's probably the big question that I want to see if we can get asked is, how is Tesla managing the mix of battery cells between Megapack, Model Y, Semi, Cybertruck, et cetera, with this, it's a huge advantage for Tesla to have this, ability to be flexible. How are you managing that flexibility? And, can you give us some color on how you're applying that to the different vehicles and the different battery cells? And, is 4680 being shifted to, I think that question would be a really good question. And hopefully I will be on top of it.
When do you expect Cybertruck to launch?
That's a hard one. I think in theory, middle of next year. I think they're sandbagging. I don't think we've seen any drone footage of the Gigapress arriving in Austin yet, but I believe that Idra is sending the Gigapress. But I would think they would need more than one. So I'm a little puzzled about that. My guess is Q2 of next year we start to see.
So in 9 months.
Yeah, I mean, I'm an early order. I ordered in the first hour. I'm probably order number 10,000. And when they say, hey, if you want your dual motor, it's another year. If you want your quad motor, it's $100,000, and you can pick it up in 3 weeks. I'm going to take the quad motor.
So you think they will give us the option to change to another?
Well, the first vehicle is quad motor, and nobody ordered a quad motor.
Exactly.
So, will they give that option only to tri-motor orders first? I don't think so. I think they'll give the option to anybody who ordered a Cybertruck, and it might be 120 grand. I mean, if you think about it, like a Model X Plaid is 150 grand now.
Yeah.
I paid 135 for mine with everything on it. So I think a Model X Plaid is in the ballpark of 140 or 150 grand. Isn't a Cybertruck with 4 motors in a lot of ways better than a Model X Plaid with 3 motors?
I mean, the price doesn't shock me at all. I do believe, obviously, if there are truck people out there that are used to 60, 70, 80,000 trucks, they're maxed out there. But for the highest level model, no,
but it's a quad motor Cybertruck. It's gonna be faster than a Porsche 911.
So will
not a truck?
Will you change your X Plaid for the Cybertruck? If
that's the plan. Option? The plan is to sell the X Plaid and buy the Cybertruck. Absolutely. And honestly, I don't think there's a price they could set it at that I wouldn't go forward and buy it. If they said 150, I would probably do it to be an early Cybertruck owner. And I would probably do whatever it was. I don't think they're going to go that high. I think it's going to be like 100, 120. Okay. So
I think we went through the list.
well, I don't think we covered Q4. We covered Q4 delivery numbers, and I don't think we really got into it. So I think it's going to be around 480, 460, something like that. Do you have a number in your mind for
Well,
Q4?
I have 450. I have 450 because of the tax effect in the US,
Okay.
but you're right. It could be that other people just substitute and don't care about the 7,500 and it gets as filled as it was. Or maybe they just switch to the higher level models for the whole of Q4, which is actually better for the margins, right? If they suddenly deliver the X's and the S's and the performance models quicker, nobody's going to complain about that.
No, I mean, they can't make S's and X's with 2170s. So it may be like performance Model 3s and long range Model 3s. I think performance Model 3s and long range Model I think performance and long range Model 3s won't qualify for the credit anyway. So I think those vehicles, they'll just deliver those vehicles in high volume, and they won't deliver standard range Model 3s, which are lower margin.
Exactly.
And then the Model Y is tricky because I think the Model Ys do qualify for the credit. What is it 80,000 is the limit on the SUVs?
Yes.
So probably both Model Ys qualify for the credit. So that's a tricky one. So maybe some people will hold off delivery of Model Ys, and that'll be an impact. Sure. So Q4 financials is third, fourth week of January, and we see if Tesla has, if we see a jump to 380, let's say in Q3, and then we see a jump to 450 or 460 or 480 in Q4, it doesn't take a lot to do the math and say, well, wait a minute, the earnings per share in Q4 is going to be, and if we're right about this, the price shift will be even higher in Q4.
Yeah, and that's why I do believe, honestly, the main catalysts now in the order of importance are obviously Q4 numbers, because that'll be the annual numbers and wake everybody else up, but Q3 will be the precursor for that, and the upgrade of the credit rating. Again, the upgrade of credit rating, just to say that I don't think it will have an immediate impact on really the shift in institutional investors. That'll take later, but the stock price should react very quickly. Yeah,
but when you get to Q3, I think at Q3 the market sees it. Sorry, I don't want to place too much faith in the Wall Street investment community, but if they deliver substantial, let's say $1.80 a share in Q3, post split earnings per share, or even 160, right? I think Wall Street starts to get it, and then you go out to Q4 and you see more than $2 a share, right? Because if you see more than $2 a share in Q4.
Oh yeah, then you have at 8 next year. I mean,
and there's continued growth. You're way over 10.
Exactly.
For 2023. That's why I think like $8 and something a share split, post split for earnings per share for 2023 is ridiculously low.
That's why I started with showing that tweet from last night.
Right. No, I think we're looking at more than $10 a share in 2023. And if at some point you have to recognize, wait a minute, if it's going to be more than $10 a share, and I give it a bearish price earnings ratio of 50, we're at $500 a share, and the stock is currently trading under 300.
Exactly.
And somebody at some point has to figure that out. And then you say, well, wait a minute, if they continue, look at the growth rate. Like, what's the growth rate if they deliver 450,000?
Yeah.
Even if they deliver 380,000 in Q3, you start thinking, well, wait a minute, what's the growth rate here? And, this is the thing when I hear people saying Tesla can't grow that fast, it's like, have you seen Giga Texas? Exactly. Like, this is with Q3 is with Giga Texas barely delivering any vehicles.
Yeah.
And Berlin is, starting to get their ramp going. When you recognize where Texas and Berlin will be in 2023.
Yeah. But you see, that's why I was actually having a good laugh when I was doing my little comparison with Amazon and Apple, looking at those 2014 press releases at that moment and whatever. Even in that year, they didn't understand what Apple was doing. I mean, can you imagine that in 2014 people wouldn't analyze Apple and or Amazon the right way? I mean, obviously, web services from Amazon came later and are today the cash cow of the company. But analysts are typically closed in on their little market, what they know. So this is the same person analyzing Ford and GM and Tesla. How in the world do you want them to understand it? I mean, I nearly feel sorry for these people.
Okay. So other things, one last thing that we have that's direct is buybacks or dividends.
Yeah.
I don't think we're going to see dividends. Do you think there's a chance there will be a share buyback before the end of the year?
Not before the end of the year, but I do believe, I really hope they get that message to look at what happened to
With Apple borrowing and buying.
Exactly. Because if rates come down again, which I do believe, I mean, I'm eternal optimist, it would really make sense to borrow some money at low rates with a good credit rating and buy back stock. It would be the biggest present ever for everybody.
Yeah, I'm planning to buy a house fall of next year, so I hope you're right.
There we go.
So the other things that we have, you have this note, positive image from sister companies. SpaceX launches Neuralink, Hyperloop, Vegas. I would also say Starlink.
Yeah. Well, that's part of SpaceX, right?
Well, there's SpaceX launches and there's Starlink operational. Like we've seen, Royal Caribbean just announced they're using Starlink, and T-Mobile just announced the deal with Starlink. These all create some positive spin about Tesla in a sense, and I do think that SpaceX launches in particular. I think the Falcon Heavy launch, where they launched the car into space, that one got so much attention. There may be some more Falcon Heavy launches this fall. I don't know if they're actually going to happen. I think those could make a dent, but Starship launching and successfully landing, and especially if they catch the booster in the chopsticks. If they actually pull that off, which I don't know if that'll be this year, but if they pull that off, there's that moment when you're like, wait a minute, if they can do that, what can they do with cars? So
I mean, they should have had that moment when the first Falcon landed, but maybe it comes then.
Now Neuralink, I think we're going to see. I think it's Halloween. They're going to have a Neuralink presentation, and I think we're going to have first human. I think they're going to have implanted Neuralink in the first human patient, and that my guess is that first human patient is going to be moving a mouse with his mind and maybe even entering text with his mind.
Wow.
A quadriplegic, tetraplegic, somebody who's badly paralyzed and can't even manipulate a mouse or a keyboard with their hands.
I'm looking forward to that. Neuralink touches me a lot. I think that this can do so much good, but and I'm pleased it's Elon looking after it, because it could also be manipulated in so many bad ways. So I'm really looking forward.
Yeah, I don't see that moving Tesla stock, but maybe. Will people get it? Because I saw the monkey mind pong, and I don't think people got it. I don't think that had much of an impact on the general populace. Will it be more impactful with a human or less impactful than a monkey? I don't know. Monkeys are cuter than humans. I mean, you can see where you could do a dramatic story where it's not just you show that, but you actually have a story about what this person's been going through in their life and how dramatically it's improved their life. Because the monkey can't tell you how cool it is, right? But the human can tell you, this is how big of an impact this has been on my life. And by the way, just really quick, there's been some FUD about Neuralink, about monkeys being killed. And I found out, I didn't realize this, Neuralink did a blog post. He said they only do the Neuralink implants on monkeys that are going to be euthanized anyway.
Okay.
There are monkeys who are near end of life for whatever reason.
Yeah.
And they only do them on monkeys that were going to die anyway. So, this is like they call it a terminal procedure. So people think they're taking healthy monkeys and killing them. No, these are monkeys who are already unhealthy for some reason. So that's the FUD keeps coming up, and I can see like Neuralink has this great thing, and somebody will spin it. Gordon Johnson will spin it badly. Somebody will, what's the guy's name? Thunderfoot.
Always, right?
Thunderfoot will say how awful it is, and common sense skeptic. These FUDsters. You have Hyperloop on your list. I don't think Hyperloop is happening for more than a year. Elon mentioned it in a tweet that they might do a test Hyperloop or a demo Hyperloop between Austin and San Antonio. I don't think that's happening for more than a year. Vegas should, by the end of this year, probably have reached, they'll make some progress this year on the loop in Vegas, but I don't think it's going to be that much. And I don't know that so far that Boring Company system in Las Vegas has really captured the public. When they complete it, when it's a 29-mile loop, that takes people to when people fly to Vegas and take a Boring Company tunnel to get to their casino.
Exactly. Take it at the airport.
That's when it's going to really be a game changer. And especially if it's self-driving Teslas, that there's no driver. So let's say the end of 2023, I think that's where that starts to kick in, and people, because that might be the first place we see self-driving Teslas.
Mm.
Well,
It will be actually
driverless.
funny. I don't know whether you know about Thanksgiving next year. So November 2023, there's going to be a Formula One in Vegas. They're doing it there.
Yeah.
And I think that was so great if it would work by then, because first of all, it will attract so many people. Vegas will be so stuck in traffic. It will be horrible because they closed the strip and everything around it, right? And now can you just imagine if the whole tunnel system will work by then?
I have a more fun idea. Imagine if Tesla enters a roadster.
That would be great.
Enter a next generation roadster.
There's an electric version of the
but I'm saying, what if they enter a roadster in the real race?
Well, no chance, but it would be cute.
I'm not saying it would win, but it might win the first few laps.
No.
If it has the SpaceX package. So, okay. Now I wanted to ask you, I know you haven't read the S3 filing. Lucid Motors did a filing with the SEC in the last couple of days. We called it a shelf registration or something like that. With basically a plan. I see two interpretations of it. The main interpretation that I've seen is they've issued a plan to issue stock and raise $8 billion in capital from investors to help to fund the company, because they're expecting to run out of money next year. They got like a $4 billion cash pile at the last earnings call, and they're spending $2 billion on CapEx alone by the end of the year. So they're going to run out of cash. But there was another part to the filing that nobody's talking about, which is it indicated that basically the Saudis are getting ready to sell 1.1 billion shares when the float is 540 million.
I saw that in your thing. I don't know about the second part. The first part is quite normal for a normal company, but is Lucid a normal company? It's not. So you would file a thing like that. This is sort of a line of credit rather than having a line of credit by a bank at a certain interest rate. You'll have a line of credit saying at any moment I can call on the market to issue new shares and please come in, right? And so they prepare that so that they are ready at any moment to say, so it could be tomorrow, 8 billion, or it could be 500,000 tomorrow and the next day and again and again and again, right? So there's just this broad amount pre-approved, announced, and that's it. And it allows them. And I think actually Tesla did something similar at one moment. And so that by itself didn't strike me. But what struck me is, so the Saudis are not paying anymore? Does that mean that's it?
Well, what they filed was there are insiders who hold stock, and it's primarily the Saudis who own 60.7% of the company.
Exactly.
There are other inside investors, but the big nut is this 1.1 billion shares that the Saudis are potentially going to sell over the next year. So there's two effects. Number one, if you issue stock to get new investment in the company, if the stock is currently trading at say $15 a share, you're probably going to have to offer that stock at less than $15 a share. So you're going to dilute existing shareholders by doing so. Yeah. And then if the Saudis start selling shares, if you think it's bad for Elon to sell some of his stock in Tesla, and that's going to depress the stock, Elon owns 20% or so of the company, and he sold like 1% of the stock in the company. I'm making up the number, but it's something like that, 1 or 2%. If the Saudis are going to sell 60% of the shares of the company over the next 3 years, that might have somewhat of an effect on lowering the value of the share price.
Game over. I mean, the thing is, the one reason why people still believed in Lucid was that it seemed to have infinite cash from the Saudis if ever needed, and you could just watch it on the horizon when you would need it. Now, if that suddenly stops, the share is just worth much less. But if they already prepared to issue more share, meaning diluting more, and if at the same time all this insider held equity comes to the market, this is game over. This is finished. Right. And I mean, they better start producing, because it goes very quick. Cash is the worst indicator. Once you have no cash anymore, that's it. Yeah. And
it's really clear.
I just don't see that.
My read of the S3 filing, and I know you haven't read it, it wasn't clear to me whether we're going to raise $8 billion in capital and the Saudis are going to sell stock, or the $8 billion is inclusive of the Saudis selling stock.
I do believe it's the first version, because I don't see them doing that. But it was striking to me that the media reports, their press release didn't mention the insider selling. I mean,
1.1 billion shares when you have a $540 million float, you'd think that would deserve a mention in your press release.
Yeah.
They didn't mention the press release. The media covering it, there was not a whole lot of media coverage, but the media covering it didn't mention the Saudis selling their, being prepared to sell their stock.
Because it wasn't in the press release, because the media, all it does is read the press release.
It's the second paragraph of the filing. And then there's two lucid YouTubers who made videos about it, and they didn't address the Saudis selling stock.
Because they only read the press release. That's the game of the press release.
One of them, they both had the image of the SEC filing on the screen, and they highlighted the parts about the $8 billion and the selling, but like you didn't even read to the second paragraph. And I'm like, am I living in some sort of bizarro world? Like, how do people not see this?
Because they don't want to see it.
They don't want to see it, exactly. Okay, so thank you very much for coming on and chatting with me. We've gone for, quite a while. So I'm going to edit this and post this. To the audience, thank you so much for watching. Please check out this t-shirts at elonbits.com. And check out my other videos. Please support me on Patreon, Locals, etc. Alexandra, you have a YouTube channel now?
I do. It's called Tesla Boomer Mama. It's so small, but please subscribe. Yes.
Okay. And thanks everyone for watching.